In this video, I'm going to go through everything you need to know about VAT. Hey guys, welcome back to the accounting channel. Today's topic is VAT. Basically, we're going to go through how to register for it, when to start charging it, and how to calculate it. And this video forms part of a playlist I'm making on Irish taxes for startup companies and entrepreneurs. And I'll put a link to the playlist in the description below. And if you enjoyed the video, don't forget to like and subscribe. What is VAT? Well, VAT is just another tax that is added on to the sale of goods at every stage of the production or distribution of those goods. Ultimately, it is the consumer who pays the VAT as they are the end user of all products and services. As a business owner, you must ensure that you are charging VAT on your sales and that you are also registered for VAT with the Revenue Commissioners. So, when do I register? Well, the good news is not straight away. You have to meet certain thresholds depending on the type of business you're in. So if you're a services business, you have to have made €37,500 worth of sales in the last 12-month rolling period. So if you breach that level, you'll have to register for VAT and start charging VAT on all your services. If you make the supply of goods, so if you're selling products and not services, the threshold has increased to €75,000. So if you breach that threshold, that's when you have to start charging VAT on your sales within a 12-month period. But did you know that you can voluntarily register for VAT? But why would you want to voluntarily register for VAT? Well, it turns out there's actually two very good reasons why you want to voluntarily register for VAT. And one of the reasons is that you can actually get a refund of VAT that you've paid for on your own expenses as a business. So what does this mean? Basically, before you start a business, most people incur expenses before they make sales, in which case they are actually paying VAT already on their expenses. So if you register for VAT, you can get a refund of the VAT paid on those expenses. Number two, when you do eventually have to register after breaching threshold amounts, you won't have to change your price. What do I mean by this? Well, for example, let's say pre-registration, pre-VAT registration, you were charging your customers €1,000 for your services. Okay, so they were just giving you €1,000. Now you're VAT registered, you still want to get €1,000 for your services, but on top of that you have to pay €230 to the government. So now you're going to have to go and charge your customer €1,230. Your customer's not going to like that if they were used to paying €1,000. So how do you register for VAT? Well, the easiest way is to go onto www.ros.ie and you will download form TR2 completed online. And you'll need a 6-digit Xero number, your company number, if you are registering your company for VAT. If you're a sole trader registering yourself for VAT, then you just need your PPS number. Alternatively, you can get an accountant to do all of this for you, but it's worth shopping around because some accountants and law firms even charge about €2,000 to register your company for VAT, and some charge as low as €100, so it's good to just shop around. So, who's actually allowed to register for VAT? Well, any business that is trading and has a presence in Ireland can register for VAT, or a business that is not located in Ireland but has trade with Ireland. So they either sell to Irish consumers or they purchase goods off Irish suppliers. There are some things to note though. Revenue Commissioners will require evidence that you are either trading with Ireland or located in Ireland. And what can this mean? Basically, they'll want to see evidence that the company is registered in Ireland, so that could be your certificate of incorporation or Xero documents. Or if your directors live in Ireland, then that'll be a utility bill from the director. Or if you just simply have trade with Ireland, invoices from suppliers that are in Ireland or invoices to customers who are in Ireland. The Revenue Commissioners might reject your application if you cannot prove that you have suppliers in Ireland, customers in Ireland, if you don't hire anybody in Ireland, or if you don't have directors who live in Ireland. So basically, if a company or a business has nothing to do with Ireland whatsoever, chances are you will be rejected for VAT registration in Ireland. And it takes about 28 days to become VAT registered, and this might be increased by 30 days if you get asked questions like that by the Revenue Commissioners. So, what are the VAT rates in Ireland? Well, that all very much depends on what the product or service that is being sold is, where it is being sold to, and who is selling it. The standard rate, which is 23%, is the most common and is basically the default VAT rate. So if it doesn't fit into any of the next categories that I'm going to explain, then it is probably the standard rate, 23%. 13.5% is the reduced rate of VAT, and this it mostly applies to tourism-related industries. So Think hotels, cafes, restaurants, hairdressers, and oddly also photography services and building related supplies. So if you fall into that category, you charge 13.5% on your VAT to your customers. And last year, this tax was 10% and it moved up to 13.5%, which is why, your skinny latte suddenly costs €3.50 instead of €3. So that kind of explains why prices go up. There's also a 9% rate, which is another special rate which applies to newspapers, ebooks, and sports facilities. There's another lower rate, 4.8%, which applies to livestock. There's even a 0% rate of VAT, which includes books, children's clothing and shoes, includes medicines, some foodstuffs like tea, coffee, bread, milk, and some exports. And the reason there's a 0% rate of VAT is because those companies will still be able to register for VAT, charge 0% on their sales, but claim back the VAT on their own purchases. Some companies are entirely VAT exempt. So, for example, there's no VAT on certain financial, educational, and medical providers. There's also a certain way of providing VAT on intra-EU sales. So if you sell goods or services to another EU company that's in another EU jurisdiction, then you won't charge VAT on that sale. But they will have to self-account for that sale. Similarly, if you purchase goods from another EU company in a different EU jurisdiction, then you will have to self-account for VAT on your VAT return, and this basically involves calculating the VAT yourself and putting it on your return, even though that company may not have charged you VAT. So, how is it calculated? Well, it's actually quite simple. If you're using the standard rate of VAT, it's just 23% of the value of the goods or services that you're selling. So let's say you're a freelance web designer and you charge €1,000 to your client for web services. And now you're VAT registered. Well, you're going to have to add 23% onto that bill. So you're going to present your client with an invoice for €1,000 plus VAT at 23%. So that's another €230 for a total invoice of €1,230. Then eventually when that client pays you, they'll pay you €1,230. That'll land in your bank account. 1,000 will belong to your business and €230 will belong to the revenue commissioners. You file your returns on ros.ie. The filing period is bi-monthly, so every 2 months you must make a return. The return form is called VAT3, and you have to file this return 19 days after the last day of that VAT period in question. So, for example, if we have a VAT period that covers 1st of March to the 30th of April, I have 19 days after the 30th of April to file and pay my return. So the 19th of May is the date that I must have it done by. Failing to file or pay will result in fines and penalties and even interest accruing on the liability that has not been paid over. So it's vitally important that you don't miss that deadline. You must also file a VAT RTD return every year, and that is due 19 days after your year-end date. So, for example, if your year-end date is the 31st of December 2019, you had until the 19th of January 2020 to file your VAT RTD return. And that return is basically just summing up all the VAT on sales and expenses for the entire 2019 financial period. You can deregister for VAT as well if certain requirements have been met. And you can do this by informing revenue commissioners on ros.ie. So, for example, let's say you have fallen below the threshold amounts within a 12-month rolling period. You registered by mistake. If you cease trading, or if the nature of your business has changed. All of these can result in a deregistration of VAT. But be mindful, if you voluntarily registered for VAT and you want to deregister and you had received refunds of VAT and expenses, you will have to pay that back to the revenue commissioners. So just be mindful of that. Okay, so let's go through a simple example. So let's say, using the example from earlier, you're a website designer. So you basically provide website design to various companies, and within the period 1st November to 31st of December, we made 3 sales. Okay. Each of those sales, one of them was 1,000, one 2,000, one 3,000, okay? And we charged VAT at 23% on each of those invoices, resulting in the following totals. 2 of the sales were made to Irish companies, and 1 of them was made to a German company. Okay, and I'll tell you why that's important in a while. So we also have expenses relating to that 2-month period. So we might have rent for €500 twice. So 1 for November, 1 for December. Let's say we bought accounting services, that was €400. We had an electricity bill come in, that was 150, and we bought some widgets as well from an Italian company for €800. And I'll tell you why that's also important from an intra-EU perspective. So the reason I have some sales and expenses from other EU countries is because while on your invoice you're not going to actually charge this German company Donor GmbH €690 VAT yet. So what's going to appear on that invoice is €3,000 basically to that German company. They're going to self-account on their end for the VAT. So actually this should be 0. But in your expenses, it'll be the same scenario. So we have widgets here from Widgeto SPA. It's an Italian company. We bought €800 worth of widgets off them, but they didn't actually, on the invoice, there's no VAT. There's no VAT on that invoice. It just says €800, and that's all we pay to the Italian company. But we must self-account for that VAT. So we have to pretend that they did charge VAT on it. So this is where it can get really quite confusing. Let's say we didn't have these expenses from Germany and Italy. We didn't have sales to Germany, we didn't have expenses from Italy. It would be rather simple to calculate what we need to pay to the revenue commissioners. So it would be these two. That's what would appear in our sales. And for our expenses, we would capture these. And then we just simply take one away from the other. And we would owe €334 to the revenue commissioners. Okay. But because we have intra-EU sales and purchases, this gets a little bit complicated, and we have to self-account for this. So let's do one at a time. Let's say, so on the invoice, as I said, it only says €800. There's no VAT, so you have to self-account, so you calculate it yourself at 23%. So what we need to do in this scenario is add that VAT both to our sales and to our purchases. So what I will do is I will add that to my sales, and I'll just label this so you know what I'm talking about. And we're also going to add it to our expenses. So you see, there's no, the net impact is nil, okay, because we've added the VAT element of that expense to both our sales and our expenses. The net impact is nothing, sorry. So it's still, even if we go back to not including it, it's still 334 that we owe to the revenue commissioners. And for the sale to Germany, on our invoice we put no VAT, so it's 0 rated essentially. We also don't need to put it on our VAT return because that German company will do what you've done down here on your expense or purchase. They will need to do on their side. All you need to do is 0 rated. But there are other things that you need to do on your VAT return when you have sales to other EU countries or purchases from other EU countries. You basically have to record how much you sold to that country. So, and I'll show you this on the revenue side itself. So for Germany, we'll need to record this base amount, this €3,000, and for Italy, we'll need to record that we bought €800 from a company in that country. So let's go over to the ros.ie website and show you and see how this works in practice. Okay, so I'm logged on to ros.ie now, and I want to file a VAT return. So on your home page, there's a return section, complete a form online. So we click onto that. Select a tax type, so we're doing VAT, and we want to do a VAT 3 return, that's the bi-monthly one, and then click File Return. Okay, and then this form is presented to you. So you pick the period that you're doing, and it should normally only show the one that's actually due. Okay. If you want to make an additional file or amend or supplementary VAT 3, you can do that here, but for the purposes of this, we'll skip it. Okay, and then we have a few boxes. VAT on sales, that's the T1 box. VAT on purchases, that's T2. And you also can account for VAT on purchases. Let's say you bought a laptop for €1,000 and there's €230 VAT on that, then you can put that in here because it's a unusually large purchase. So that's just to let the revenue know that, you know, it's the return will be unusual compared to other returns. So let's go ahead and put in our VAT on sales into our T1 box. So like I said, it's the €690 that's up here, but also the 184 VAT on expenses from Italy or any other EU country down here. So it's actually €874 what we're going to put in that box. And then we have VAT on purchases, which is €541. So it's all of the purchases from Ireland plus the purchase from Italy. That was not on the invoice, but we self-accounted for it, so we calculated it ourselves. Okay, I'm just going to say we don't have any large purchases, and then you calculate it, and essentially it just takes that number away from this number. So we owe the revenue commissioners €333, which is, yeah, what I got. So they rounded down. If you had more expenses than sales, you know, you would be owed something, so there would be a net repayable, and it would appear in the T4 box, and there'd be 0 in the T3 box. Down here we have the intra-EU trade, the intrastat, and this is where you need to report the total amount of goods that you purchased from other EU countries, the total amount of goods that you sold to other EU countries, and similarly, if you sold or bought services to EU countries, you'd put them into these boxes here. So we sold services to Germany. We sold €3,000 worth of services to Germany. So that is going to be in the ES1 box, total services to other EU countries. So I'm going to put down €3,000 in here. We bought €800 worth of widgets, which are goods, from an Italian company. So total goods from other EU countries. So I bought €800 worth of goods from other EU countries. Now I didn't sell any goods to other EU countries, and I didn't buy any services from other EU countries, so these will be 0. And then you just click next, and you'll go into payment details, and then you'll just sign it, and that'll be your VAT3 return done and dusted. And that's it for this episode of the Accounting Channel. I hope you enjoyed it and found it somewhat useful. If you need help with your VAT, you can contact us at firstaccounts.ie. Go visit the website and see what services we offer. We can register you for VAT, we can do your VAT returns, etc. If you have any questions or comments, or would like to add anything to this video, you know, put a comment in the section down below. And if you enjoyed the video, please give me a thumbs up and subscribe to the channel.